Hey, good afternoon, everybody. Mike Shea, Transworld Business Advisors in Lakeland, Florida. Wanted to take a quick moment to go over the insight report that was recently presented by BizBuySell. So for those of you who do not know, the BizBuySell Insight Report is produced quarterly. It reflects national input from brokerages across the United States and reflects the sentiment and relatively accurate or inaccurate data produced by the brokers. Basically, what that means is they ask us to fill out a survey. We complete the survey at an agent level, and it's kind of subjective, but it's the best we got. And I review it pretty frequently, and it kind of validates what I see and what I don't see. So I'm going to go over it with you right now and review some input that I want to talk to you about. I don't think it's perfectly accurate. So let's share the screen with you, and here we go. So you can go and get this online. As you can see, it goes over a number of closed transactions in the last quarter. Now, this only reflects what's happened. And if you go back to 2019, 2020, you can see the dramatic COVID impact in Q2 of 20. You saw it when things normalized, the bell curve of the fourth quarter, which is normal. Our business slows down in November, December, simply due to holidays and the way the banks kind of reflect on a fiscal year. And then it climbs and climbs and climbs. And now you're starting to see it slide. So traditionally, business brokers trail, or our industry trails the economy in general. So if you were to kind of look at a pulse of where I think the economy sits, I think it would be a further down the downward slide of this graph. But you can see number of transactions that have closed is down in the last quarter. The next thing you're going to see is that the median price versus the asking price. Now, there's always a gap. Sellers always overprice. The brokers and the educated buyers and finance people know what things are going to sell for, but sellers are really in control, and sometimes they solicit bad advice from outside parties like accountants, attorneys, or finance professionals who give opinions not based upon the market dynamics or the realities of how bank financing happens. Now, when you go up to these data points up here, realize that most of this data is coming from large brokerage, from brokers who tend to do deals that require banking. So the spread of differences between what they sell for and what they actually list for are two different things. They tend to be pretty tight, but this only reflects what's sold. Realize that only 20% of what goes to market sells. So this is a pretty tight spread on what sells, but take note of this spread right here. The average deal out there is $300,000 to $350,000. In a world where there were strong exchange rates and a lot of business sales are being done to expats coming from out of the country, it was not uncommon to see pretty strong price to ask and no seller financing, given those people couldn't get bank loans. Now the exchange rates are in the inverse, where you can go to Europe and have a stronger dollar. That's not so much the case anymore, that there's a strong exchange rate coming inbound. So you're not going to see a lot of cash deals. The takeaway I have for here is if you're a seller in the next 2 quarters or 3 quarters, you're not offering seller financing, you are going to sit and your deal is going to sell. Again, you'll see the typical trend line here. Production is going down. Number of deals is, relative to the first graph is down, and the price to ask is down as well. So that kind of ties into this graph right here, which is really what prompted me to do this video. Buyer and seller confidence. So we have shifted, even though inventory remains low, we have clearly shifted from a seller market to a buyer's market. That you're going to watch the banks pull back. They will still lend, but I was listening to CNBC this morning, and it's pretty clear that there's going to be another interest rate hike. I think from an effective lending standpoint, we're going to be about 9.5% on business loans, which is the highest I've ever seen in 17 years. Not the highest in my lifetime, but certainly the highest. Those who say that it's historically not that high are spinning. It is historically high for the intents and purposes of the people who've been doing business for the last 20 years, the highest I've ever seen. So you can see that sellers are feeling the pressures of inflation, the continuous labor problem, the cost of capital is tightening, and the supply chain issues from COVID continue to linger. So confidence is low. Buyers, you're going to have a little bit of time. I'm actually telling people to sit a little bit on a buy side. simply because sellers tend to hold out and be a little bit delusional and not deal in reality. In about 3 to 4 months, when more deals are hitting the market because the pressures are so high, you're going to see prices come down. And if you're a seller, take that to mean you need to adjust and do some seller financing now, because if you wait too long, you're gonna be sitting stale and competing against a whole lot of other businesses offering better terms. Buyers are clearly more optimistic. They're expecting sellers to discount dramatically, and sellers, again, we just talked about that, they're going to be a little bit delusional with regard to what's going on. Buyer demand for restaurants and dining out. Again, the COVID relief kicked in. People are you see it in the travel industry, and you see it in the food space where people are dining out. We continue to see that as a deal. And traditionally in recessions, and now I've been through 3, restaurants and small businesses, like, despite inflationary pressures, beans and rice, pizza, salads, quick serve restaurants continue to thrive during recession. So expect pizza parlors, those low cost comfort food opportunities, to be good deals for people to buy from. Again, all this data is available online if you want to look it up under the BizBuySell Insight Report. Rate hikes and inflation continue to impact businesses. Talking about it about a month and a half ago, I did an interview with Michael Hershaft, and we were talking about what we forecast. Again, there was a rate hike 2 weeks ago. There is going to be another rate hike. It's anything over a $300,000 deal. Expect the banks to really pull back on, and expect for seller financing, even if there's SBA. Don't care what your lawyer says. Don't care what your accountant says. Everybody's going to be asking you to give terms. And if you don't, you're going to have to wait until this recession runs out. That's about another year. So probably 2 years from now. Now, if your sales, think about this. If you're going to wait and your performance drops because of all these inflationary prices, you're probably waiting 2 more years on top of that to go to market as a seller, because the requirement for the SBA is going to be 3 years of good books and records to get that thing done. Little pip here. The rate hikes, the dismal D's, declining sales, dissension, disinterest, disaster, distraction, debt, divorce, disease, disability, and death. All of these are weighing against sellers in competing in the marketplace. So what's the short message? Sellers, offer seller financing, be realistic about your price, do not overprice, let the broker show you the comps, and price it within the comps. So what is the summary? The summary of this is that sellers need to get real about their pricing. They need to look at the comps and believe their broker. If they don't believe their broker, they've hired the wrong broker. So hire the right broker, have them show you the comps, get a solid opinion, live in reality, and understand the decision you make, how it impacts a year from now to 2 years from now. If you're a larger deal and you need bank financing, you need to understand how the banks behave with regard to lending and what they expect from your financial performance when they lend, and live in reality. So I'm pushing now seller financing to everybody hard, being realistic with buyers about the lag times. This is all historical data, nothing new here. We've seen this before. So sellers get real, price it appropriately. Buyers have less capital to spend, and the banks are not going to be lending like they were a year ago. Any questions, give me a call, 321-287-0349.